Hello, I'm Martin Smith and this is your MaxiForex Week in Review. Today we'll cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover headlines of the week, let's look at last week's rises and fallers. The euro-dollar pair had another rough week, mostly over concerns surrounding the Greek debt crisis. All in all, the pair fell just under 0.8% and was last trading at 141.51. The pound fell for the fourth week in a row versus the dollar, dropping to 159.67 for a total weekly loss of around 1.2%. The dollar yen had a mixed week, but came up with a small gain, adding 0.38%. And when the pair closed on Friday, it was last trading at 80.42. The dollar mostly gained against the CAD this week, gaining 0.75%. The dollar CAD was last trading at 0.9873. In commodities this week, August crude orders had another rough week, tumbling down 3.2% to $90.20. This was a little surprising considering that oil had gotten off to a good start, but a horrendous day on Thursday took away all of the momentum and the gains. Gold had a similar situation, starting the week off strong, but losses on Thursday sealed the fate of the yellow metal for this week. Overall, gold lost 2.5% and was last trading at $1,500 an ounce. In the news this week, the sovereign debt crisis in Europe took center stage as policymakers fear that Greek lawmakers may not pass a €78 billion austerity package, which could be the fifth loan payment received by the country. Greek Prime Minister George Papandreou barely won a vote of confidence last week, and he must now push through a series of budget cuts and asset sales in order to maintain EU support to avoid a default. The situation is a testy one, and it has affected markets far and wide. The euro fell to a record low against the Swiss franc, touching 118.06 on Friday, the lowest level since the multi-nation currency debuted in 1999. The Swiss franc is often seen as a stable currency and one that operates as a safe haven for investors in times of economic uncertainty. With low manufacturing outputs in the US and retail sales down around the world, the global economic atmosphere is one of minimal risk appetite. If Greece happens to default, there is a fear that the crisis will spread and emerging markets will also be susceptible to it. Emerging markets are usually linked to growth, but because they are not established enough, they're considered a higher risk investment. When investors are unwilling to pour money into riskier investments because there's a greater fear of economic uncertainty, especially in terms of manufacturing and growth, emerging markets usually suffer as a result. As an example, using the current climate, the Brazilian real fell for the third week in a row and the country is now trying to fight off inflation. One reason Brazil is suffering is because their economy is linked to commodities. And with less manufacturing, there are less resources required. Economies like Brazil's, Canada's and others that are tied to growth-linked commodities feel economic pressure at a significant level when risk aversion is prevalent. This week should, however, provide some answers for investors, which should at least provide a short-term outlook on the overall situation. The vote in Greece will have the attention of many investors and is something you should all be paying close attention to. If the vote does not pass, the euro could take a significant fall. But if the opposite plays out, renewed confidence could see a very positive reaction for investors. Well, that's all we have time for today. I hope you enjoyed this week's review and you'll join us next week. Until then, be sure to visit us at maxiforex.ru. Good luck and happy trading.